Hello, this is the Chart Profit video. Just over 2.5 hours into the trading day, Friday 24th of August. This from the pre-open. We're looking at the E-mini S&P. Back on the 8th of August, I said pre-open that I've marked aggressive buying 3 times over the last 6 days, and the market is higher, indicating this is effective buying. Even in the day frame, the E-mini is printing above support, which is the 30-day point of control at 28.15. Price above that level is strong location. Subsequent to that comment, we saw one day over here, the 15th, where we saw a test and a pretty quick recovery back above that level, 28.15. As I've been saying pre-open this week, last week, the E-mini tested the support but closed the day session back above it and then rallied to the end of the week up here. First sign of minor weakness would be price printing time below that level, which it has not done. And we had aggressive buying at the end of last week. This week, yesterday, actually on Thursday, we saw this very minor controlling price migrate higher to 28.58.50 here. So on the minor time frame, we just saw a dip down, and then that point of control migrating higher, and overnight we held that level and we're higher today. So just going back to what I said on the 8th of August, even in the day frame, the minor time frame, the E-mini is printing above support. Strong location. Just looking at the current 5-minute bar for the E-mini, here's that level, 28.58.50, and from this point on we've held that level and we're higher today. Just looking at the pulse chart, price momentum here has held above 0 since early in July. We've seen a dip in momentum, but it appears to be turning back up at the moment. Breadth improved here, and we haven't seen significant selling since this point. As we mentioned last week, 280.90 is the 2-month controlling price, which was the most local reference point. We briefly tested below that level here, similar to the E-mini as just described, and we've rallied from there. We've just seen last couple of days a minor controlling price 30-day at 285.70, and we're up above that at the moment. IWM, the Russell 2000 ETF, out at new highs. We're looking here at the DAX, and as I went through last week, in last week's video, a major divergence in strength between the US and global markets here. The European German DAX index, the major, is at 12.450 here, and the DAX this week once again closing below that level in a weak position. So as I said last week, price back above there would be positive for the DAX and the risk on scenario. Made the same point last week with the FTSE, the UK FTSE 100 index, the 1 year here at 76.48, and we're closing below that at the end of this week. T-bond ETF, TLT, the major is here at 121. We'd previously found support here at the 6-month at 118.50, rallied back to this level, a little bit of resistance here. We're now above it. TLT is printing in a strong price location here. GLD, the gold ETF, is also in a weak price location, but it is rallying back quite strong this week. This level here at 114.50 is the major value area low of a large distribution which goes back a long way in time. We talked at length about this chart last week. I like to see charts above these major controlling prices before assuming strength, and we're quite a way below 121, which is the major on GLD. With some time in this region here, is a possibility that major could migrate lower, possibly not down to here, but maybe around 117. So if gold rallied and filled in some time here, it's possible that major could drop down and we'd get a more positive scenario. I think this is at the moment an oversold bounce. The gold is very inversely correlated to this chart, the dollar index. One piece of evidence that gold might improve would be the dollar index back underneath 94.80, which is its major. We've discussed this turn here relative to the previous major before it migrated higher. It migrated down to that level in here somewhere, and then we saw the rally, and then in here the major came back higher. I'm assuming that if the dollar has turned and is headed higher from here, that this level would provide support. Euro FX chart is rallying quite strongly here this week, but this level, which is the 1 year at 117.55, again, if this is in a downtrend from this point, if that's going to continue, this would be resistance as it was at this point, but time printing back above that level would bring that viewpoint into doubt. British pound having a rally but a weaker bounce than the euro at the moment, and longer term remains in a weak price location below its major here at 132. Finally, the dollar yen, most important level in the chart, is now 111.30. The major was slightly higher at 112.70, which was resistance at this point, but that has now fallen down to 111.30. Interesting to monitor that level next week. If the dollar yen finds itself printing time above that level and subsequently above this natural resistance here, this halfway point at 112, so the chart sort of printing time back up towards this high or in the region of that high would actually now put it in a strong position because that major has fallen lower. So that's going to be an interesting chart to monitor into next week. So that concludes, and thank you for watching.